Happy Monday, everyone. Welcome back to Your Finance TV. We've covered the banks extensively, and this week the Senate Banking Committee will be holding its hearing. So let's just move on from that. We've covered it so well, so let's look at the charts of the S&P, Dow, and Nasdaq. They look very interesting right now. We're going to do an earnings preview for Micron, and for Love It Like It, Leave It, we're going to look at the names with earnings this week: Dave & Buster's, Lululemon, McCormick, RH, Cintas Corporation, and Paychex. As always, we have Brendan McCarty here from Column E to break it all down for us. How are you, Brendan?
I'm great. Good morning to you and everybody.
Thank you. Before we kick off, don't forget to click on that subscribe button and like button below. Our numbers are growing very quickly, so thank you for all of that. And keep on coming back to watch more and more content on Your Finance TV. What other levels we should be concerned about in this market, Brendan? The last 3 weeks, I've seen banks go under, regulatory authorities pointing the fingers at one another, Fed speakers confusing markets, and at the end of it, we still don't really have a clear picture. So we thought it was a good time to look at the charts and make sure you, the viewer, takes note of some important levels in the market right now. Let's look at the S&P, Brendan.
Sure. So before we just jump in, our overall view is that we're still in a bear trend. So we take all our views on this as sort of like, all right, we have still a primary bear market, but markets can rally in bear markets. So what the Fed, by injecting a ton of cash into the system that's been universally called not QE over the past 2 weeks, even though it went onto banks' balance sheets and they can use and lend it, but that's another story. It gave a boost to the market. And I gave a presentation to the Market Technicians Association 2 or 3 weeks ago about the use of money, like lifting risk assets. And we all know what happened in 2020 when everybody received a check from the government and the Fed injected trillions. Markets just climbed. Well, one of the parallels to 2020 is what we're seeing now. Everybody's buying the top 8 names in the Nasdaq, and you're creating this split, as we'll discuss now. So in terms of the S&P, it's an interesting story. Earnings are gradually turning on a forward basis, so we don't see that too much. I haven't seen that lately. We've only seen falling earnings, so that's turning. So that is how, if you have rising earnings plus rising cash, typically you have rising equity markets, and that's what we have for the S&P right now. It barely climbed over the 3940 level this past week. When it did, buyers started pouring in late on Friday. It was very programs. It was just like, steady buying through the end. When they got over 3940, but they still have a bigger hurdle ahead at the 65 week at 4024. That level was hit early last week, and then the markets rejected it majorly and fell like 100 and something points. Then they just climbed back into the end of the week because the Fed gave some money into the system. This climb over 4024 argues that the S&P is probably heading towards 4200 if it can get over the 65 week at the 4024. If you were to take the fair value, like we like to look at money relative to the S&P, and that fair value right now is like 4250. And there is a lot of factors coming together at 4250 and 4200. The 13-month is up there at 4185, 20 months up there. So there's a lot of head resistance above in this bear market trend. If it breaks 3940 on the downside, all bets are off. And there's a reason for that could happen if you ignore the Nasdaq. In terms of the Nasdaq, it's the strongest of the 3 index. It's climbing. Its top 10 or top 8 index positions are like eclipsing the return of the whole market, if I'm not mistaken, this year. And it's all your well-known FANGs, or I don't know what you call them anymore, but let's just call them FANG stocks for now. Most are saying they're saying this is a bad thing, but if we go back to 2020, the rally off the lows was driven by the Microsofts, the Googles, the Apples, because people thought those were ports in the storm. Well, guess what happened after that? Everybody started buying everything else. So the play right now by the broad market is to buy the Nasdaq and try to force this market higher. I mean, that's the feeling that we're getting. The Nasdaq's the strongest of the bunch. Looks like the next major level for resistance is 13.5, which is, 12,000 points higher. Above that, if the market really wanted to get a heater going, 14.5 is where the value of cash is. I don't think it can get there because I think the Fed will drain some of the cash, which will drive that level down, which means 13.5 is probably where it's going to run into before all is said and done with. The 20-month is also at 13.5. So that's a big level in terms of resistance. Support right now is 12,440. Below is the Nasdaq 100. That's the 65-week. And below, if it breaks the 65-week, 12,000 is the last of the three majors, the three supports and resistance. Now, in terms of the Dow, and I said this to you earlier, I haven't charted the Dow in ages. So, because I just 30 stocks just doesn't do it for me. I need more octane. I need 500 and whatever the Nasdaq 100. But the Dow is the weakest of the bunch, and you would think if you just look at the Dow in isolation, you would think that we're in a bear market alone, and that confirms what we've been looking at. The Dow is the weakest. It's actually below its 65-week. It cracked through it 2 weeks ago, I think. 33K is roughly where it sits. It's actually targeting about 29.5. So the Dow is actually positioned lower. Could this be the big shift from value to growth? Because the Dow theoretically has more value names. I know the oil positions haven't really, they've been drag as well. And now you're seeing crude oil climb. So that might change the view for the Dow. But breadth is lousy. Like, people are not buying the Dow names. They're selling more aggressively down and then buying up gradually. This argues that the view, if breadth doesn't come and join the party, the Dow is a drag. So the question is, who's going to win this game? Is it the Nasdaq rallying to 13.5, or is it the Dow falling to 29.5? And the S&P is like an innocent bystander sitting in the middle, watching back and forth. Right now, 2/3 of the market says we're going higher in the short term. Longer term, it says we're going lower. So that's how we're playing it. We got whipped like about 2 weeks ago. We thought the market was going lower, and then it violently just turned tail and went higher. That was driven by the Nas. So I think a lot of macro funds actually had trouble this month, particularly on that turn. So I don't think they're going to aggressively try to pummel it again. So that's where it's like a tale of three markets. Literally, you have the value, the growth, and then the S&P is which way do we go?
Yeah, market definitely does feel a little squeezy at the moment. That's for sure.
Yeah, I think last week's move higher squeezed a lot of people out of the market. The Fed day did a number on a lot of people. I'm wondering.
Yeah, well, as I said, this week they're just really going to be sitting in DC, pointing fingers at one another, and like, I knew better, you knew better. We're doing the right thing. When in actual fact they're not. But that's another story for another day.
Yeah, it's not even a good story.
No. All right, let's move on to the earnings preview for Micron. Is the tech space back, Brendan? That's like the big question, isn't it? After we just looked at the Nasdaq chart, thought we should look at Micron earnings. We recently sat down with Doug Bush to look at a few semiconductor names, but didn't look at Micron. They report on Tuesday. The share price has made a move so far up of 22% this year. But looking at this chart, it seems to be approaching a level where it needs to break out. We set for a squeeze if they come out with some positive comments here, Brendan?
So this is like the so if you were to put the MU on the scale of the Nas, the S&P, and the Dow, it looks exactly like the S&P, slightly weaker, which argues that the market is not really embracing anything but those top 10 names, the Nas. But they're not throwing it out the semis either, right? Like when the Nas rallies, the semis tend to follow. And MU, being a semiconductor of sorts, is gradually turning. Now, its biggest problem is NAND and DRAM prices. They've been going down, it seems, forever. But the latest weekly report, if I read it right, and I'm not super familiar with NAND and DRAM prices like I used to be, and Bloomberg doesn't chart it anymore, I noticed. So I had to actually pull up reports and read. Essentially, the price decline in those two is down to like 1% from like 9% like 5 weeks ago. So we may be hitting some sort of low for NAND and DRAM. If that is the case, that would argue Micron actually has profit expansion potential. So the story with Micron is this: we're going into the report. Analysts are not buying up Micron because of this previous problems with NAND and DRAM, falling profit margins, falling demand for their servers. Like the picture in the past is not great for Micron. But now we're at that turning point where all right, we're going to start now. What's the future going to look like? And can we ignore the past? And that is the view of the chart. So heading into this, I think everything determines on the outlook on this. I think everybody, if the backward look or the previous quarter's number or this quarter's numbers not that bad and the outlook is better, I think they'll give a boost to the stock. It failed at the 65-week, just like the S&P did last week. We call it strange since the Nasdaq is firmly above its 65 weeks, so you can see the difference. But we think that if this could be like the beginning of more stocks joining the party. So if the S&P earnings are turning higher on a forward basis, Micron confirms it, maybe this is like the beginning of the turn for many stocks to rally. I don't know. I'm not that overly bullish. I mean, when not all three indexes aren't rallying and the view of the markets is still lower, it's hard for the Microns of the world to really rally. So it could be an isolated incident. I don't know what Doug was talking. I didn't take a look at Doug's semi picks. Doug's very good. So if I'm going against the semi picks here, I apologize. So anyway, ultimately it comes down to this: their outlook on DRAM and NAND. If they are turning, that will add to profit margins going forward for MU. And this could be a signal that maybe the broad markets start joining the party. If they blow their earnings here, it's a confirmation of what bear market we're in. It's a confirmation that analysts perhaps are still a little bit too optimistic, and the talking heads that are talking about a melt up out there are probably wrong. So it's kind of an important report, actually.
That lovely name of melt up. I haven't heard that one for a while.
You're starting to see it. Like it's like you could make, if you look at the Nasdaq chart, you could get really excited about it if you're a really bullish person. And some of the bullish people on Twitter just like post bullish things and they get all excited about it. Anyway, moving on.
All right, let's move on to love it, like it, leave it this week. Whilst earnings have slowed down massively, there still are some names that are very interesting to look at this week. So this week we've got 3 for Tuesday and 3 for Wednesday. You ready?
Let's roll.
All right, we're starting with Dave & Buster's symbol play report on Tuesday.
I'd leave it. I think demand will actually be up on their call. I think the consumer's been out and about like crazy, and I think Dave & Buster's will join it. But the price turned lower this past week. Then there's a long tail in the candle, just like you're seeing with MU, just like you saw in the S&P. Investors are betting maybe against it, so I would leave it for now. I would leave it.
Okay. Lululemon, they report on Tuesday as well.
So I think Lululemon's problems might be over that they had over the last 6 months. It had a nice turn off at 290, so we like it.
Okay. McCormick is also the other one on Tuesday.
So we just talked about 2020 coming off the lows. McCormick was a hot stock back then because we're all cooking. It's not cooking, but we do like it. It turned off of 70 higher, not a dramatic turn, but McCormick seems to be finding buyers. So I don't know if people have decided the restaurants are too expensive.
Okay. RH reports on Wednesday.
So I had to figure out who the heck RH was because he got rid of Restoration Hardware. It took me a bit for that one. This is a really difficult one. It's been falling very hard for 5 straight weeks. It landed right on support. So this is catching a falling knife, literally. It could get bloody. We like it on that as it held 241. I don't know if they've had a good earnings report in ages, but it's catching a falling knife and we like it.
Okay. Cintas Corporation, CTAS, they're on Wednesday too.
Could be like a Micron report, but we'll leave it. It failed in the 20-week, but that may just be temporary. So this reminds me a little bit of Dick's from a couple weeks ago where we left it and the thing just kept going.
Okay. And the last one we're looking at for reporting on Wednesday is Paychex, Payx.
Very fascinating report because SIVB was a big player in that market in terms of Paychex, literally Paychex. And Paychex being a big competitor of that. We'd leave it. I think the market is a little worried about the stock based on what happened at SIVB. It broke through support. It put in an okay turn last week from a support level, but it's kind of out of the blue. It's like not a support that we would be excited about. So we would leave it.
Okay, Brendan, listen, thank you very much. A shorter show this week, but that's great. I think it's really important to go through those charts for all the viewers out there. It's all positioned very precariously right now.
Yeah, short and sweet, but we get to the point this week. I'm not so long-winded like I normally am.
Well, have a great week, Brendan, and thanks for all these insights.
Yeah, no problem. Have a great week, everybody.
And for everyone else out there, good luck investing.